All right, hi everyone. Welcome to today's breaking news and setups brought to you by Vantage. Uh, Before we begin today's webinar, just want to let you all know we're streaming directly into the Vantage app as well as over Zoom, so do not hesitate to drop your questions in the relevant chat boxes as we progress through today's webinar. All right, before we begin, also please take note of the disclaimer. Right, the information, context, and opinions which are expressed in this presentation and on the following slides are solely those of the presenter and not necessarily those of Vantage, and are solely used for educational purposes as they do not constitute investment advice or consultation on how a client should trade. Also, take note of the risk warning that comes with trading margin forex and CFDs as they carry significant risk and is not suitable for all investors. My name is Ketan Ramachandra, and this webinar series is brought to you in a special partnership between Vantage and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. All right, so let's take a look at what's coming up on the economic calendar for this week, right? There's quite a few things going on. And just this morning, Monday, 9th of June, we had China release its inflation data for consumer and producer price indices. We also have the trade talks set to begin between the US and China. Trade negotiation talks to begin in China between the US and China, taking place in London later today. And then on the 11th and 12th, the US will be releasing its consumer and producer price indices respectively on those respective dates, and sandwiched in between, we also have UK GDP data as well. Right, so here's the calendar for this week. Right, we see consumer prices, CPI and PPI continue to highlight deflation in China. Right, consumer prices have deflated now for for the fourth straight month, while PPI, producer price indices, has deflated for 32 consecutive months. Right, the ongoing deflation signals a very weak domestic demand from both the consumer and producer segments. Right, and we can see here CPI data, consumer price indices or CPI data for the US will be released on Wednesday, 11th of June, 12:30 p.m. GMT time, followed by PPI data on Thursday, the following day, 12th of June, at the same time. Sandwiched in between, we have GDP data for the UK at 6 a.m. GMT. Now, this is the monthly GDP indicator, which is set to show contraction for the latest reading. And when we look at CPI, headline CPI, it is showing for the US, it is showing acceleration for the month of June. And PPI as well looks to be coming in stronger on a monthly basis as well. So should we see inflationary pressures in the US start to accelerate once more, right? Specifically for headline and core CPI, as well as for headline and core PPI, that could trigger a renewed demand for the US dollar, right? Remember, the US dollar has come under significant overhead pressures, right? Due to the ongoing tariff escalation and trade tensions, the US dollar and US bonds have lost its shine as safe haven assets, and we've seen both of these asset classes lose value quite drastically. Right? However, should we see inflationary pressures reignite in the US, that could provide a near-term lift for both the US dollar and also for uh, uh, we would likely see bonds sell off even further as well. If inflationary pressures reignite in the US, we're likely to see bonds sell off, while we may see demand for the dollar return in the near term. All right. Before that, just last Friday, right, we had the Bureau of Labor Statistics release its employment report, where we got an insight into the employment figures for the month of May. Right, so for the month of May, we saw the unemployment rate remain unchanged at 4.2%. This is the level that has held steady since March of this year, while we saw non-farm payrolls coming in at 139,000 jobs being added to the US economy, slightly higher than the forecast of 126,000. However, April's figures, which were originally at 177,000, were revised significantly lower, coming down to 147,000. Right, and we can see that the combined payroll figures for March and April were both revised lower, leading to a combined figure of 95,000. So we can see here, despite several non-farm payrolls figures coming in better than expected for that particular month, we have seen subsequent revisions being revised lower for these figures. So nevertheless, it is still not a very robust set of employment figures with regards to the US, because we've seen pretty much every single non-farm payroll figure being revised lower in the future. Right, so despite seeing job gains of 139,000 for the month of May, which was higher than the forecast of 126,000, it is quite likely we're going to see this figure being revised lower at the next report. Now, looking at China's CPI and PPI, where we can see consumer inflation has deflated for four consecutive months, right? Highlighting the ongoing challenges of trade risks between the US and China, and also it highlights the sluggish domestic demand as well. Looking at PPI, PPI has deflated for 32 consecutive months, right? And this was the steepest decline since July of 2023, right? Once again, there's rising concerns about rising concerns and uncertainty about potential US tariffs, and also the ongoing persistent weak domestic demand is stifling output as well. Right, so with that, now let's move on over to the live charter trading view and begin the analysis of the dollar index. Right, and then after that, we'll take a look at the commodities, the indices, major indices as well, and we'll touch on one of the we'll touch on cable as well, since we got GDP data for the UK coming out, being released on Wednesday as well. Right, so starting with the dollar index, I'm on the daily time frame here, and we can see that this index continues to trade in a prolonged downtrend. We can clearly see a series of lower highs and lower lows, and at the same time, this index continues to trade underneath the red Ichimoku cloud, all of which highlights the ongoing bearish momentum. Right, we can see here, despite a pretty decent rebound on Friday, right? Remember on Friday, we had a pretty decent non-farm payrolls figures, right? With regards to just the headline non-farm payrolls number and unemployment rate, right? So that was released at 12:30 p.m. GMT time on Friday, 6th of June. Initially, the dollar index dropped as low as 98.90. However, we saw it reverse quite sharply to hit a high of 99.35 on Friday. However, since markets reopened this morning, we've seen this index come under pressure once more, right? As the dollar continues to remain out of favor, with many investors and traders shorting the dollar, causing dollar index to drift lower as markets resume trading today. So going back to the daily time frame, let's try and identify the key support and resistance levels for this index. Now, looking at the dollar index here, we can see that it made a swing high resistance on 29th of May, right? Pretty decent swing high resistance being formed here. On 29th of May, this is where we can identify one potential resistance barrier. And beyond that, we have another swing high resistance taking place on 13th of May as well. And so first resistance is going to be at this swing high that has taken place on 29th of May, and that level is at 100.53. And we can also run a Fibonacci retracement on this downtrend, beginning from the swing high on 12th of May, going down to the swing low on 5th of June. Looking at all the fibs, we can see that 61.8% retracement aligns very well with the swing high resistance at 100.53. Higher up, I see a significant overlap level, and that level sits at 101.78. We can see that previously this level functioned as resistance in early and mid-September of 2024, before functioning as pretty strong support in early April of this year. After breaking lower in mid-April, the dollar index ran into resistance at exactly this overlap level at 101.78. You can see this swing high resistance being formed here on 12th of May. So very clearly, this level at 101.78 is a very significant overlap that we can identify as the second resistance. Right. Now, on this downtrend here, prolonged downtrend, we can run a couple of Fibonacci retracements, beginning from the swing high on 13th of Jan, going down to the swing low on the 21st of April. Looking at all the fibs, right, we can see that on this downtrend, we don't see any of the retracement levels aligned close to the second resistance. We can already see that the dollar index has climbed above the retracement at 23.6%, so this retracement is no longer valid, and 38.2% simply sits too far from the second resistance. Let's try and start from another point, perhaps from this level here, from this swing high on 28th of Feb, going down to the swing low on 21st of April. on this downtrend, we can see that the 38.2% retracement aligns pretty well with the overlap level at 101.78. So let's just keep this level on here in our analysis. Right, so these are the key resistance levels for the dollar index on the daily time frame. Let's now look at identifying the support levels. And for that, we can zoom out a little bit. And when I go all the way back to the charts on March of 2022, I can spot a nice triple bottom being formed here, right? We have a very significant multi-swing low support at around 97.90, which was formed in March of 2022. So this is where the first support sits. And when we look at the price action in the current form, right? If we look at it, the latest price action, we can see that the dollar index stabilized just above the first support on 21st of April, right? We can see as the dollar index was falling rapidly between 28th of March and 22nd of April. Over this 4-week period, it was falling rapidly. However, it managed to stabilize just above 97.80, which is where that multi-swing low support had been formed in March of 2022. So very significant support level here between 97.77 and 98.20. Now, with regards to okay, now on this zigzag pattern here, I can also try and run a Fibonacci projection. And the projection is going to begin from point 1, 26th of March, going down to point 2, 21st of April, and ending at point 3, which is 12th of May. Looking at all the key projection levels, we can see that the 61.8% projection level aligns very well with the multi-swing low support at 97.77. Right? And we can potentially use the other projection levels in the identification of the second support. Right, let's zoom out and go back to where the dollar index was trading back in 2022. Right, that looks to be another decent pullback level here at 97.25. Right, we can see a swing high resistance being formed here in January of 2022, resistance once more on 25th of Feb 2022. And once the dollar index broke above this level, what was previously a resistance barrier is likely to function as support. And that's how the second support for the dollar index has been identified, and it's a pullback level at 97.25. Right, we can see now the 78.6% projection sits pretty far from the second support. Perhaps it's something that could be of use in the future, maybe not now. Right, if you look at it here, there is probably a decent overlap level here at 96.43. This overlap level aligns pretty well with the projection at 78.6%. But for now, right, these levels are simply too far from where the dollar index is currently trading. So we don't need this overlap and the projection at 78.6% for now. But perhaps this is but take note of this level and projection, because these are factors that we could be using in the future should we see dollar index slide even lower. But for now, we simply do not need these levels because they're simply too far from where dollar index is currently trading. So we just keep the 61.8% projection in our analysis here. Right. So here are the key levels for the dollar index on the daily time frame. Right. First resistance is a swing high at 100.53, accompanied by a Fibonacci retracement at 61.8%. Second resistance is at 101.78. This is an overlap level, accompanied by a Fibonacci retracement at 38.2%. First support is at 97.77, which is a multi-swing low level that has been in place since March 2022. And this level is also accompanied by a Fibonacci projection at 61.8%. And finally, the second support sits at 97.25, which is a pullback level. Right, for now, we can see dollar index continuing to remain under pressure, right, despite a pretty decent rebound since the lows of Thursday, right. Once again, we see the dollar fall out of favor for investors and traders, and we can see this index sliding lower as well. So if anyone is short on the dollar index, right, identifying your take profit target within this zone that's identified between 98.35 and 97.80 would be a suitable area to do so for any short trades that you may have for the dollar index. And once again, if you're short on the dollar index, identify your take profit target within this zone, ranging from 98.35 to 97.80 would be a suitable area to do so. Right, with that, let's move on over to cable, since we've got GDP data for the UK being released on Wednesday. And we can see that this currency pair has climbed very strongly. Remember, broad dollar weakness continues to persist throughout financial markets since middle of January, and that has propelled many currency pairs, uh, including cable as well. So we can see here cable has rebounded as much as 12.5% from trough to peak. Right, the peak was formed on last Thursday, 5th of June. You can see here it has risen more than 12.5%, a very strong uh, reversal here. It has even surpassed or climbed above the prior swing high resistance that was formed in September of last year. And you can see cable easily breaking through this level on 26th of May. It did run into resistance not once but twice at the end of April at around 1.3430. But after breaking higher at the end of May, it looks like this level is now going to be functioning as a pretty decent support. Right, this looks to be a very nice overlap that we can identify or that we can label as the first support. Right, looking at it here, right, we can see prior swing high resistance being formed on 29th of April. Then after breaking higher on 23rd of May, we saw cable bounce off this level on the 29th, right? Bouncing off 1.3444 very nicely, creating a very nice overlap or very significant overlap, which we can label as the first support. Now, in terms of the second support, I see a very significant swing low being formed here on 13th of May. Right, and it's also pretty close to where the swing high resistance was formed as well. So very clearly another strong support area here, potential support area at around 1.3180. Now on this uptrend here, we can run a couple of Fibonacci retracements. Let's begin the first one from the swing low of 13th of January, going up to the high on 5th of June, looking at all the fibs. Right, we can see here on this uptrend, none of the retracement sits close enough to the first or second supports. That's fine. Let's try and see. Right, there's another significant uptrend beginning from this swing low on 7th of April. Right, and we can see here in this case the 23 and 50% retracement sitting pretty close to the first and second supports respectively. So we're just going to keep 23 and 50 in the analysis here. Right, now in terms of resistance, we're going to have to zoom out. Okay, and before that, right, I can also spot a very nice ascending trend line, a very significant ascending trend line for cable that has been in place since 8th of April. We can see this currency pair bouncing off this ascending trend line in mid-May and came very close this morning as well before turning higher. So take note of this ascending trend line, pretty critical line to watch out for as well. Now, in terms of resistance, we're going to have to zoom out a little bit and look at where cable was trading back in January and February of 2023. So these are the next resistance barriers that I can identify. And let's see whether if we can use them in our analysis, right? One of them is going to be the first resistances, I believe. Right, we can see here, right? We can use both of these levels as the first and second resistances respectively. So first resistance is basically a multi-swing high resistance that has been in place since February, since 3rd of Feb, all the way till 22nd of Feb 2022. Very strong resistance barrier here. And higher up as well, this is another significant swing high resistance being formed in mid-Jan of 2022. So this is how we've labeled or identified the second and first resistances. Right, coming back to this chart here, right? Coming back to cable in the present time, right? I can also spot a nice zigzag pattern between 8th of April and 14th of May. So I'm going to try to run a Fibonacci projection, beginning from the swing low of 7th of April, going up to 0.2, 28th of April, and ending at 0.3, which is at 12th of May. Looking at all the fibs, right, we can see that the 61.8% projections is pretty close to the first resistance, while the 78.6% projection aligns very well with the second. So let's keep these two resistance projections on. And these are functioning as supporting arguments for the resistance barrier here. Now, for anyone who's long on cable, right? If anyone who's long on cable, should we see this currency pair rise into this resistance zone identified between 1.3595 and 1.3620, this is where you can consider booking some profits as well. So anyone who's long on cable, identifying a take profit target, perhaps a partial take profit target within this resistance barrier between 1.3590 and 1.3620 would be a suitable area to do so. Oops, second support, where did we go? Yep, second support is here. There we go. Right. So these are the key levels, key support and resistance levels for cable on the daily time frame here. We're seeing a very strong uptrend. And as long as this ascending trend line continues to remain respected, we are likely to see this currency pair edge higher as well. All right, now let's take a look at let's move on over to the commodities, looking at gold, and then we'll touch on WTI oil as well, looking at gold. Right, we've seen gold make its latest intraday all-time high on Tuesday, 22nd of April, hitting $3,500 per ounce. Since then, gold prices have actually sort of ranged sideways, right? It's a relatively wide range, but nevertheless, we can see that this precious metal has found support at around $3,170 on the lower bound and run the resistance at around $3,430, right? Despite it being a relatively large range of about nearly 8%, right? Nevertheless, we are seeing sideways action for gold since let's see since the beginning of May, right? So that also enables us to identify the first support and resistances quite easily, right? First resistance is a multi-swing high level at $3,426 per ounce, and first support, right, is a nice overlap at $3,132. We can see here this overlap level previously functioned as a swing high resistance back in the beginning of April of this year. And once the bullish breakout took place, this swing high resistance could potentially function as a pullback support. And that was what had happened pretty much exactly on Thursday, 15th of May. So as gold prices bounced off this pullback level is now identified as an overlap, which we can label as the first support. We have a very significant overlap at $3,132 per ounce, which has been identified as the first major support for spot gold prices here. Now on this uptrend, we can run a Fibonacci retracement beginning from this swing low on 7th of April, going up to this intraday all-time high on the 22nd. Looking at all the fibs, we can see that the area identified by between the 61.8% Fibonacci retracement and the first support is a pretty significant support zone here. And we don't need the other retracement levels for now, just 61.8% would suffice. Now, on this uptrend that begins from this swing low on 15th of May, right, I can spot a pretty decent intermediate support level as well, right, because we have seen spot prices manage to hover above 3,279 for most parts of last week, right? For most parts of last week or most parts of end of May and early June, we've seen gold prices manage to hover above $3,279 per ounce. Pretty decent intermediate support level being identified here. Now, I'm also going to run a second Fibonacci retracement, this time beginning from this swing low on 15th of May, going up to the swing high on the 5th of June. Looking at all the fibs, we can see that the 50% retracement sits pretty close to the intermediate support at 3,279. Right, so as long as gold prices manage to remain above the 50% retracement here and the intermediate support, we're likely to see this precious metal remain elevated and perhaps make a good run towards 3,400, right? So after gapping higher today, gold prices initially gapped higher, then dropped to fill the gap and now looks to be climbing higher, rising higher once more. So if you're long on gold, right, perhaps identifying take profit target between 3,386 and the first resistance is a suitable area to do so. So take note, there's a pretty decent resistance barrier being identified between 3,386 and the first resistance. So if we do see gold prices rise into this zone, this is where we can identify a pretty decent take profit target, right? A partial take profit target for any long trades on gold in this zone. Now we're going to be running one more Fibonacci retracement, this time beginning from this swing low on 14th of November, going up to the intraday all-time high. Looking at all the fibs, we can see 38.2% retracement aligns very well with the overlap at 3,132. Now, in terms of the second resistance, right, that's going to be close to where the intraday all-time high is probably going to be formed, right? And we can also use a Fibonacci extension as well to find a Fibonacci extension. We're going to be running a retracement from this swing high, 6th of May, going down to the swing low on the 15th of May. Key projection levels sit at 137 and 161%. And we can see that the intraday all-time high sits pretty close to the extension at 127%. So that's how we've used the combination of the intraday all-time high and the Fibonacci extension at 127% to help us identify the second resistance. And of course, should we see gold prices continuing to climb higher, we can eventually then use the extension at 161% to identify another resistance barrier, and that level sits at $3,628. Right, so these are the key levels here for spot gold prices. Let's move on over to WTI oil. Right, so since mid-January, we've seen oil prices come under significant selling pressures, right? Combination of the energy policy by America, right? President Trump signed off on a bunch of executive orders on 20th of January, right? And one of them was to increase oil and gas production in the US. This was all with the aim of driving down energy prices so as to keep inflation in check, which is what has played out nicely, and combined with global growth concerns as well, and oversupply by OPEC Plus, right? That has caused oil prices to tank quite significantly. We've seen since its peak on 15th of Jan, WTI oil has lost over 31% from peak to trough, and the lowest point was on 9th of April. Since the first week of May, oil prices, WTI or crude oil prices have rebounded quite nicely. However, it looks to be stalling at around $64.50. This is where I see an immediate resistance barrier, right? So we can see despite oil prices sort of consolidating between $57.70 on the lower bound and about $64.80 on the upper bound, right? Right, it's sort of like sideways action, right? We can spot pretty decent sideways action for this commodity here, right? Since 9th of April, right, we've pretty much seen crude oil prices find support at around $56 and run into resistance at around $64.50, right? So we're not really seeing a very strong downtrend at the present moment, more of sideways consolidation within a relatively large range, right? You can see here from the top to the bottom of the range is as large as almost 13.7%, pretty wide range here. Right, so that this range also helps us to identify the first resistance and support levels pretty easily. And when I look across this level here at $65.50, I see a very significant pullback resistance. Right, we can see the first significant swing low taking place on 10th of September 2024, the second significant swing low taking place on March of this year. So what was previously a very important multi-swing low level, multi-swing low support level, which eventually gave way on 4th of April. This is now likely to function as the first major resistance, right? You can see the first major resistance here at $65.50, which is the pullback level. Now we can also run a couple of Fibonacci retracements. The first beginning from this swing high on 2nd of April, going down to the swing low on the 9th. Looking at all the fibs, we can see the 61.8% retracement aligns very well with $65.50. And that's our first resistance. And higher up, I see another significant swing high resistance being formed in early April at around $71.20 per barrel. So that's where the second resistance is going to be identified. We can we can run a second Fibonacci retracement, this time beginning from this swing high of mid-Jan, going down to the swing low on 9th of April. Looking at all the fibs, right? In this case here, okay, there's no real retracement level that aligns close to the second resistance, so that's fine. Right? Don't force the Fibonacci level onto the analysis if it doesn't line up close enough to a predefined resistance or support level. Now, I would also want to probably highlight this intermediate resistance barrier here, right? We can see at around $64.30, WTI oil has failed to break above this level, right? So after gapping higher, right, as oil prices gapped higher this morning, it sort of ran out of steam at around $64 per barrel and is sliding lower, dipping towards $63.50. Now, in terms of the first major support is a multi-swing low level at $60 per barrel. We can see crude oil prices bouncing off this level since 15th of May. And of course, the second support is this multi-swing low. Right, this is a very significant multi-swing low level that has been in place since 9th of April, and that level sits at $54.73. Now, on this, I guess, uptrend, we can probably run a Fibonacci retracement. Right, this is not the cleanest uptrend here, but let's check it out. We can see that the first support is also accompanied by a Fibonacci retracement at 50%. Right, we can still use the 50% here, identifying a pretty strong support zone for WTI oil. And to take note, crude prices look to have stalled this morning, right, running to resistance at around $64 per barrel there. However, if you can stay above the first support, which is $60 per barrel, we could see some sort of consolidation within this zone here as well. Right, now let's move on over to the indices, starting with Germany 40. Right, Germany 40 is the index that tracks the DAX futures, and we can see that it made its latest intraday all-time high last Thursday, 5th of June, and that level sits at 24,469. We can also spot a nice V-shaped recovery here, right? A nice V-shaped recovery for this index, breaking past the prior swing high resistance or multi-swing high resistance that was formed on 6th of March and 18th of March, right? And this breakout took place in mid-May. So we can also spot a pretty decent support level at the prior multi-swing high resistance. So let's begin with the support. Right, remember the prior multi-swing high resistance. The prior multi-swing high resistance was at 23,474, and after breaking higher on 12th of May, we can see this level has then proceeded to function as pretty decent support from 14th of May till the 23rd of May, right? So this creates a very nice overlap at 23,474, which we can identify as the first support, right? For the second support, we're going to see if there's any, it it's somewhat, so I guess, sort of spot pretty decent support level here, right? You can see a pretty significant swing low being formed here on 11th of March. We see a little bit of consolidation here as well on 31st of March as well. And after breaking higher, this level could potentially be another support area at 22,439. Okay, now after identifying the first and second supports, we can run a Fibonacci retracement as well, beginning from this swing low here on 7th of April, going up to the intraday all-time high that was formed on Thursday, 5th of June. Looking at all the fibs, we can see that 30.2% retracement sits pretty close to the second, while 23.6% sits pretty far from the first. So let's just keep 38% for now. Don't really need the 23.6% for the second support, for the first support, but we can use the 30.2% retracement for the second support. Now, in terms of resistances, remember this was the intraday all-time high. Right, this was the intraday all-time high for the DAX from last Thursday. Right, we don't have any other resistance areas to identify from the past, right? So in such a scenario, we can rely on Fibonacci tools such as an extension to find the next potential resistance barriers. So to find this extension level, we're going to be running a retracement from this swing high on 18th of March, going down to the swing low on the 7th of April. Key extension levels sit at 127 and 161%. And we can see that the the extension at 137% sits at 24,752. We can identify this as the first resistance, and the second resistance can be identified at the extension at 161%, although this seems to be a little far, but in the present context, we don't really have anything else that we can use. So let's just keep the second resistance at the extension at 161% for now. Right, so these are the key levels here, key support and resistance levels for the DAX on the daily time frame. Right after hitting an intraday all-time high on Thursday, 5th of June, equity futures or the DAX futures also looks to be pulling back slightly. However, there's a very significant overlap support at 23,474, and we are seeing this bullish momentum continue to grind, continue to keep prices elevated, continues to keep this index elevated, right? And we could see probably continuing to grind higher as the week progresses, right? Barring any new or barring any breakdowns in trade negotiations between the US and its major trading partners, we are likely to see market sentiment remain overall positive, and that would keep equity markets lifted, that would keep global equity markets lifted. However, should we see any significant breakdown in trade in negotiations between the US and China or US and the European Union, that's likely going to create a lot of headwinds for global equities once again. All right, now let's move on over to the US 500. Right, we are seeing a very similar V-shaped recovery for this instrument as well. Remember, the US 500 is the instrument that tracks the S&P 500 futures. Right, we can spot a very nice V-shaped recovery. However, this index has yet to climb above its intraday all-time high that was formed on 19th of Feb, prior to the steep correction and brief bear market as well. Right, so if you can see, 6,128 is a multi-swing line resistance that has been in place since the end of January. Right, so we can see here, this is very likely where the first major resistance sits. And in terms of the first major support, I can spot a very nice overlap level. I can spot a very nice overlap at 5,797. We're going to be using this overlap in the identification of the first support. Why is that? We can see it previously functioning as very strong support on 20th of December last year, and then again in mid-January of this year. A little bit of consolidation here on 5th of March before finally breaking lower. And we can see this level functioning as resistance on 26th of March. This creates a very nice overlap. And we can see that once it broke above it, once US 500 broke above this overlap at 5,797, we can see it beginning to function as support once again on 23rd of May. So very clearly, this level at 5,797 is a very significant overlap, which we can identify as the first support. In terms of the second support, I would probably try and label it here at another overlap as well, right? There's a big gap here that was formed in 2nd of April, which was eventually closed, but this looks to be another significant overlap at 5,524. Or perhaps maybe something a little bit closer. There's a pretty big gap here that is yet to be filled, right? There's another gap here that is yet to be filled as well. Perhaps I'm more inclined at the present moment to use this level at 5,687 in the identification of the second support. This is a pullback support level here. Now that we've identified the first and second supports, let's run the Fibonacci retracement beginning from this swing low on 7th of April, going up to Friday's high, looking at all the fibs. Right, in this case here, right, perhaps we can use a 33.6% retracement. We're identifying a pretty decent support zone between 5,687 and 5,730. Right, and we can run a second Fibonacci retracement, this time beginning from this swing low on 21st of April, going up to Friday's high, looking at all the fibs. And we can also see 23 and 38.2% sit pretty close to the first and second supports respectively. There's a pretty wide support zone here around this around at 5,687, while we have a very nice overlap at 5,797. Now, with regards to the second resistance, remember this is where uh, this level here at around 6,130 is where the intraday all-time high was formed. That was Wednesday, 19th of Feb. So in such a scenario, once again, we can rely on Fibonacci extensions. Let's try a couple. First extension we're going to run, our first retracement that we're going to be running is from this swing high on 25th of March, going down to the swing low on 7th of April. The extension sit at 127, 161%. Over here, we can see 161% sitting at around 6,394. Extension at 137% around 6,054. Sort of in no man's land. Perhaps we don't really need this extension at 127 for now. Perhaps we can keep the extension at 167. Let's also try to run a Fibonacci projection. I see a nice zigzag pattern beginning from the swing low on 21st of April, going up to 0.2, 20th of May, and ending at 0.3, which is on the 23rd of May. And you can see here, 61.8% projection sitting at 6,284. This is where we can identify the second potential resistance barrier. And we have another resistance area being identified by the Fibonacci projection at 17.6% and the Fibonacci extension at 161%. If we continue to see US 500 climb higher, and if we can break above the first resistance, then we can use this area here. This is a Fibonacci confluence identified by a projection at 17.6% and the extension at 161%. For now, first major resistance is the multi-swing high at 6,128. Second resistance is identified by the projection at 61.8%. Now, if US 500 continues to grind higher, perhaps breaking above the first resistance, then naturally the projection at 61.8% is going to be labeled as the first resistance. And this Fibonacci confluence is going to be labeled as the second resistance. So take note of that, of how we can identify the next potential overhead barriers should we see this index continuing to climb higher. Right, so these are the key levels for US 500 on a daily time frame. Right, we're continuing to see global equity markets remain elevated as long as trade negotiations continue to move in towards a positive outcome. Right, that's likely going to keep global equities supported in the near term. All right, let's maybe look at dollar yen, right? We've not covered dollar yen. Let's head back to the currencies, and maybe we can wrap things up by looking at dollar yen and dollar franc, right? Of course, with the dollar index under significant selling pressures, right? Naturally, dollar yen is going to be heading south as well. We can clearly see a series of lower highs, lower lows, and of course, we can continue to see this currency pair trading underneath the red Ichimoku cloud, highlighting the ongoing bearish momentum. Right, and we've seen every counter trend rally into the cloud running the resistance. We see the first counter trend rally that took place in mid-May, running the resistance within the cloud. Second counter trend rally at the end of May, also running the resistance, and the most recent one as well, last Friday and early this morning, stalling within the cloud once more. Right, we can see since mid-May, every counter trend rally into the cloud has been met with strong resistance for this currency pair. Right, so in terms of first resistance, right, first resistance could be this swing high here, right? We have a pretty significant swing high that was formed on 29th of May, and this level sits at 146.28. And of course, we have this very significant swing high resistance, another significant swing high resistance being formed on 12th of May at 148.45. Now, in terms of support, I can support a very nice multi-swing low level at 142.35. We can see dollar yen has managed to stay above this level since 6th of May. Right, we see the first significant swing low being formed on 6th of May, the second being formed on 26th of May, and we see a much broader one being formed from 2nd of June till the 5th of June. So very clearly, 142.35 is a very significant multi-swing low support. Slightly below, the next major support for dollar yen is coming in at around 139.70. And we can see a very significant swing low support being formed in mid-September of last year, right, as the dollar yen fell rapidly in the second half of 2024. We can see here this move from peak to trough was as large as 30.8% before the dollar yen stabilized at around 140.50 before staging a very strong rebound. And once again, as it fell rapidly from the end of March till the third week of April, it once again managed to stabilize at around 140.80 before staging a pretty strong counter trend rally. Right, so the first support or second support is a multi-swing low level ranging from uh, 140.50, 56 to about 139.70. Right, on this downtrend here, we can run a Fibonacci retracement, right, starting from this swing high on 12th of May, going down to the swing low here on the 27th. Looking at all the fibs, we can see that 61.8% retracement aligns very well with the first resistance. Let's keep that on. And on this second downtrend here, beginning from 28th of March, going down to the 22nd of April, looking at all the fibs, we can see the 78.6% retracement aligns very well with the second resistance. Right, so these retracement levels add further significance to the strength of these resistance barriers here. Right, so once again, we are seeing demand for the dollar lose steam, right? The dollar remains out of favor, driving dollar yen lower as well. So if anyone's short on the dollar yen, perhaps identifying your take profit target between 142.80 and 142.35 would be a suitable area to do so. So take note, anyone who's short on the dollar yen, should we see a much deeper pullback all the way down towards the multi-swing low, identifying a take profit target between 142.80 and 142.35 would be a suitable area to do so. Right, on this zigzag pattern, I think we can probably, on this zigzag pattern, we can probably run a Fibonacci projection as well, beginning from point 1, 29th of May, going down to point 2, 3rd of June, and ending at point 3, which is the 6th of June. You can see that this 78.6% projection sits just underneath the first support. So we're going to keep that on. 61.8% is, well, okay, 61.8 and 78.6% do identify a pretty strong support area here. 100% is sort of in no man's land, so we don't really need the others. Just keep 61 and 78.6% projection levels for now. Right, pretty strong support zone here, beginning from 142 to about 142.70. Right, so these are the key levels here for dollar yen. Right, remember once again with dollar index or with the US dollar falling out of favor with many investors and traders, causing the dollar index to plummet. This is also causing dollar yen to remain under pressure as well. All right, okay, let's wrap things up by looking at dollar franc. Right, we are seeing a very similar structure to dollar yen as well. Remember, both the Swiss franc and Japanese yen are deemed as safe haven currencies, and typically in times of turmoil, where we're going to see demand for these currency pairs increase drastically, and that of course naturally causes the currency pairs to fall rapidly. We can see here after staging a very strong counter trend rally, we can see dollar franc fizzling out around 84.60 by mid-May, and it has resumed a downtrend once again. It's a very clearly one of the first major resistances look to be at a somewhat overlap level at 84.67. Perhaps it's an intermediate level that we can try and identify as well, right? This swing high resistance here, right, is almost like a nice overlap. Okay, it's not too far. Maybe we'll just use the swing high itself to identify the first resistance, right? The first resistance is at 83.46. Swing high resistance that was formed on 29th of May. Second resistance is at 84.67, which is an overlap level. Now on this downtrend here, prolonged downtrend, we can run a Fibonacci retracement beginning from this swing high on 13th of Jan, going down to the swing low on 21st of April. Looking at all the fibs, you can see that 38.2% retracement aligns very well with the second resistance. And of course, dollar franc has already climbed above the retracement at 23.6%, so this is no longer valid. Right, in terms of support, right, I can spot a very significant swing low being formed here on 22nd of April. Right, this is where the first major support sits. And let's zoom out a little bit and see where can we identify the next major support. Looks like we're gonna have to go on over to the weekly time frame. And we can see the dollar franc has fallen to levels last seen in August of 2011, right? You can see here, dollar franc was last trading around 8,200 back in September of 2011 here. Let's see if we can probably spot any potential support levels. Right, so we can actually see right. Let me go back to the daily. Remember just now I was on the weekly. Right, so we can see here. Looking at the weekly, we actually have a pretty decent pullback support level at this is 80.67, which is where dollar franc stabilized in April as well. So very clearly first major support sits here at 80.68, and second major support looks to be at this sort of swing low here that was formed in August of 2011 at 78.98. Let's just keep these levels for now, and perhaps we can fine-tune these levels as we switch back to the daily time frame. Right, I think these levels are fine, right? First support is now an overlap, right? There was a pullback level that we saw dollar franc bounce off the pullback on 22nd of April, creating a very nice overlap at 1868. Second support is a swing low at 78.98, and on this uptrend, on this zigzag pattern, right, we can run another projection as well, beginning from point number 1, 31st of March, going down to point number 2, 21st of April, and ending at point number 3, which is on 12th of May. All right, on this zigzag pattern, right, we don't really see any of the projection levels that are sitting close to the first and second supports. Okay, that's fine. Maybe there's another point that we can begin with, starting from here, this swing high on 7th of April, going down to point 2, 21st of April, and ending at point 3, 12th of May. In this case here, we can see the 61.8% projection aligning pretty well with the first support, while 78.6% and 100% projections are sitting in no man's land. As you can see, the first support at 80.68 is a very significant overlap that is also accompanied by a Fibonacci projection at 61.8%. Right, so once again, if anyone's short on the dollar franc, right, as we see dollar franc slide lower perhaps this week, identifying your take profit target close to this significant swing low or the significant overlap at around 80.70 would be a suitable area to do so, right? So anywhere between 8100 to 80.70 would be a suitable area to identify as a potential take profit target for any short trades that you may have for the dollar franc. All right, with that, that brings us to the end of today's webinar. Right, once again, thanks for tuning in to today's session brought to you by Vantage. Do look out for all upcoming webinars for the remainder of this week. Right, we've got a combination of live analysis and educational topics coming up on Tuesday and Wednesday as well. All right, thanks everyone. Take care. Have a great trading week, and catch you all at the next session.